We want to go after the singles and doubles where we're going to make, 50, 60 grand a flip, a handful of those per year, make a great income, and then be able to reinvest that elsewhere.
If you're investing,
investors will.
The podcast for all things real estate investing.
All right, Will, it's a pleasure having you today, man. For our audience, can you tell us a little bit more about what you do?
Yeah, absolutely. I appreciate you having me on. So I got started in real estate a little over 10 years ago. I got into the mortgage business after dropping out of the college I was at. And I was playing football, had double hip surgery, and that was sort of the end of that. So came home and I was thinking about finishing up my degree, but ultimately ended up just going out and starting a career. I got into the mortgage business, and I learned the business for about a year and then jumped out into loan origination. So I was doing, the typical Fannie, Freddie, FHA, VA, all the traditional types of loans that people use. And it gave me a good understanding of debt and how all that works. And, I got to see some investors, and I ended up within the first year of being there, I had my dad co-sign and I house hacked my first property. This is before I even knew what the term house hack was. But I was able to buy a 3-bedroom townhouse. I lived in one of the rooms and had two other guys living in the other rooms, and it pretty much, paid for the mortgage, and it was pretty cool. So, did that. I bought two more houses. So now I had 3 rentals. And I got to the point where this is over a 2 or 3 years span. I got to the point where I just, you know, I was in Northern Virginia at the time, which is a very expensive market. Um, and so every time I bought a house, I would drain my bank account and run out of cash, and then basically have to accumulate again and rinse and repeat. So I was running out of my own cash doing that. And also I realized that I wasn't really situated to be a landlord. It wasn't my strength. I didn't enjoy dealing with tenants and all that. So I ended up at the end of 2019. I left the mortgage business, and me and a partner, we started a house flipping company, and that was my main focus for the next few years. And I was flipping houses and using the income that it generated to invest in, multifamily syndications and things like that. But over time, I just, got more and more drawn to the finance side of things. It was where that's really where I like to be. I like to be more on the lender side of things than on the borrower side and the investor side. So, fast forward, did a couple more deals as a general partner. So me and some partners bought a wedding venue, a small hotel. And again, that just I realized from those as well that, I don't really like being an operator. I like being more on the passive finance side of things. So in 2023, I started my first the smaller friends and family fund. We have a little over 2 million in assets in it um right now. The purpose of that was to invest in different syndications. But while I was getting it going and I had some money raised, we had, cash just sort of sitting on the sidelines, didn't have a home for it yet. And I had an old coworker call me on the phone, and he's like, "Hey, I got this borrower that I'm working with, and he has great income. He's putting down 75% on a house, but he can't qualify for anything because he's from a different country. Is there anything, and all his income is in this other country. Is there anything that, you can do with your fund?" And before he even asked me that, I was like, "Yeah, I'm in." He offered he offered a hard money. The guy was willing to pay hard money rates for a loan. And I was like, "Yeah, that's a no-brainer." He's putting down 75% and I'll be in first lien position with our fund. Yeah, it's a no-brainer. So that's how I sort of accidentally got into hard money lending. And, I've done that, and there's a few other strategies I do, but that's a big focus of mine now. And I started a dedicated hard money fund in 2025, and yeah, that's a huge focus of mine, and I'm happy to get more into that.
That's awesome, man. Do you work with investors just in Virginia or across the country?
We work with guys all over. I mean, a lot of them are in Virginia because that's where my roots are, and it's I have a deep network in Virginia, but I have guys in other states as well.
Awesome. And for our investors watching, how are you helping investors scale today with your company?
Yeah, so for the investors that we're loaning money to, we're only
Hmm.
doing Virginia right now,
Hmm.
and the reason is because that's what I know. It's the markets that I'm in are the main one is Richmond. That's where I live, and that's what I'm focused on. But we'll go all over Virginia. I don't want to scale beyond that just because I've seen too many guys get in trouble when they start to branch out beyond where they're comfortable in the markets they know. So for the time being, we have a lot of room to grow before we outgrow the markets that we're in. So, yeah, well, remind me your question again.
No, I was just saying, for investors that are looking, to scale, how could they use you guys?
Oh, yeah. So a hard money lender is great to use, whether it's us or somebody else in a local market that you're in. A hard money lender is great to work with because they just offer the flexibility that banks and traditional lenders don't. And you can usually get more deals done that are tougher for a bank or a conventional lender. If you have a property that needs a lot of work. If you're a house flipper, you're not buying good, turnkey properties. You're buying stuff that needs work and needs some improvements to be made to it. So, that's where a hard money lender comes in, and they're able to they're able to finance those types of projects that a bank or a traditional lender can't. So, you know, not all of us have the cash to just go out and do our own deals without needing a lender. So that's where a hard money lender can allow you to scale and do, one, two, three or more deals at the same time. Whereas if you only were using your own cash, or were dealing with traditional lenders, you're probably not going to be able to do that many deals.
And based off your experience in Virginia, how is the market there for investors that are looking to expand?
I like it. I mean, it's always, it's I'm hyper focused on the Richmond area, and I know Northern Virginia very well also because it's where I lived up until recently, and I lived there my whole life, so I know those markets very well. I know the areas that you probably want to avoid, and the ones that are good, and so I would say that you know, being here gives me an understanding of the market and the area. And again, that's something that localized knowledge is it's why I don't want to scale yet to like North Carolina or somewhere else like that, because, you know, I have a good pulse on what's going on here in Richmond and Northern Virginia and just the areas around here. And it's you kind of lose you lose a little bit of that when you venture too far outside of what you know.
I agree. And as someone who's a lender and and an investor, when you're looking at an opportunity in Virginia, what are the first one or two things you focus on to decide if it's worth investing in?
Well, my opinion is that any deal is worth investing in at the right price. It all comes down to the price that you pay. There's a price for every property out there, and it might be $1, it might be $1 million, but it just has to make sense, and you have to really know your numbers. You have to know your ARV, and you have to be, in my opinion, conservative on the ARV, and that's how you stay out of trouble in Virginia markets and any market.
And how are you guys finding deals, you and your investors? to get that price in a sense?
Well, our investors are the ones, they're going out and finding deals. We're just loaning them the money. So we don't really, they come to us when they have a deal and they need financing. But guys that I'm talking to, they're doing it in all kinds of different ways. I know this one guy right now that we've loaned a good, we've done a good amount of loans to him. He's in a market called Lynchburg in Virginia. And he has, up until recently, not done anything on market. He's only gotten deals, off market, word of mouth from wholesalers, just that sort of way. But recently, over the winter, I don't know if he's still doing this, but he was just throwing out offers to these properties that had been sitting a while. These lowball offers, and he was getting a lot of them accepted. And that was very interesting to see, because most guys think that, oh, you can never get a deal on market. I used to think that way. When I flipped houses, I flipped, I don't know, 13 or 14 houses, and all of them but one we got off market somehow, whether it was Google ads or some mailers or whatever. Everything came off market except for one deal. And the only reason we got that one because it was around COVID when the lockdowns happened, and the buyer that was under contract fell out, and we were just right place, right time. But so I sort of fell under that assumption that you can never find anything on market, and I think that most times it's going to be tough to find a deal on market. But when things slow down, like that guy that I'm talking about, he went out there and submitted offers, and he was able to pick up some deals, and they were good deals too.
Awesome. And let's say one of these investors, they come to you and they need a hard money loan. What separates a deal that you'll fund versus a deal that you'll kind of want to pass on?
Yeah, I mean, they gotta do their homework, and they gotta show that their math makes sense. I mean, I'm a numbers guy, and that's why I'm in lending, and it's gotta pencil out. They have to be conservative on their ARV. If I look at it and they are stretching the ARV, and the what they're gonna net is thin, it's not really a juicy enough spread when factoring in all the costs, then it's probably not something that I want to get involved with, because if anything goes wrong, it could turn into a losing deal. And that's where we don't want to, we never want to be in a position where someone goes into default and, we have to foreclose. We have never had to foreclose on anyone yet. We've only done, 30 or so loans. So it's not a matter of if, it's a matter of when. But we have a pretty disciplined underwriting approach, and I don't want to. I want our borrowers to have wild success. I want them to make a ton of money on their deals, and the way that happens is by doing juicy deals that are you're buying them for a good price.
Like you said, homework. Right now, let's say I come to you. What exactly do you need from me to kind of get that funding?
Well, we have a portal, and people can go on there and
Hmm.
send their all the basic stuff, like their entity documents. And obviously we're going to want to look at that and make sure that they send their driver's license and that they're a real person and all that stuff. We're going to want to talk to them. But then once we get through all that, and that's very fast. I don't want to make it seem like that's a long process. That can be done in 30 minutes. But once we're done with all that, and we get through that, it really becomes what does their deal look like? Is their deal good? If they send us a deal like, hey, I just got this one under contract, are you guys willing to fund this? If the ARV is 300 and they're buying it at 150, and it only needs 50 or 60,000 to renovate it, that's a juicy spread there.
Hmm.
That sounds like a home run deal, and we're absolutely going to be able to do it. But if they send one, and like I said, if their ARV is on the aggressive side, and recent comps show that the market's slowing a little bit, then and the numbers are thin even with that, then we're probably not going to want to do it. Even if they want to put down more money, I don't want to fund a deal that that looks like the borrower is not going to win on. I mean, that's just not good for anyone.
I agree. And you're talking a little bit about the market. What are your thoughts about the single family real estate market right now?
Yeah, there's a lot of headlines and people are seeing stuff out there, interest rate news, and in more and more inventory coming on the market. But I think a lot of that is national, and it's all sort of blended together. A national average does a local investor, it just doesn't do them much good. I don't look at national trends to know what's going on in the Richmond market. I look at Richmond data because some markets are doing really well, some are doing not so well. So when you blend that all together and look at the national averages, it just doesn't really do anything. So I like to stay heavily focused on what's going on in our markets, the markets that we're in. And a lot of the information that I get is just simply from talking to people, talking to other local lenders, talking to borrowers. You get a ton of information talking to all these borrowers. If I see that guys are, you know, are missing out on, like, they're submitting offers and not getting anything, then that means the market's picking up a little bit. But if I see that they're submitting offers and they're getting everything and things are slowing, I mean, I talked earlier about the guy with the MLS. I mean, that was a good data point that, hey, maybe the market there is slowing a little bit. And of course, I took that into consideration. So, I think just having your finger on the pulse of your local market that you're in is way more valuable than knowing all the data points on the national market.
Yeah. Talking about a little bit more about like numbers, can you tell us a little bit more about some investors that you're working with, some deals that they're doing, and if you have any data in your local market that you can share with us as well, that could be insightful for us?
Yeah, I don't always get. I can share stuff about some of the deals that I've done, but I don't really get. All we get is a payoff when someone pays us off, and we work with a lot of investors that are buying, rehabbing, and they will refinance into a DSCR loan or some kind of long-term loan. So that's obviously not a flip where there are numbers to show what they bought it for, what they sold it for, because they never sold it. So, when I was flipping, and what I still look at is your deal, you using a conservative ARV. I mean, again, I can't emphasize enough how important it is to nail your ARV. If you need to be an expert at at comping a property and just knowing exactly what your property is likely to sell for, because that will make or break your deal. And when I was flipping, my partner and we wanted to make the net income after all expenses, interest, the budgeted amount for the renovation, carry costs, closing costs, realtor costs, everything. We wanted to walk away with a minimum of 10% of the ARV. So if we were selling something for 40,000, or I'm sorry, 400,000, we want to net at least 40,000. And that's with a very conservative ARV. Usually if we ended up doing close to what we projected, then something went wrong with the deal, because most of the time when I was flipping houses, it went the other way, where we were conservative and we ended up making, a lot more money than we thought. And that's good because you will come across, you will have deals. If you do this long enough, you will have deals that either lose money or break even. And it's all about doing more good deals than bad deals, and if you can do that consistently over time, then you're gonna have success.
I agree. And let's talk a little bit more about strategy. If someone right now is listening to this podcast and they're doing their first 3 to 5 deals, what should they focus on to build that long-term wealth and not just quick cash? I know you spoke a little bit more about some investors have a strategy where they buy it, they refinance it. Can you share something about that?
Yeah, don't buy dumb stuff. I see there's this one guy that we work with and he wholesales. I'm not a huge fan of wholesaling
Hmm.
in general, but he was talking about how he makes a lot of money, but he spends a lot of money too, and he was showing me some $18,000 watch he was wearing, and I just thought that was crazy. I mean, I would advocate to anyone, especially if you're younger. Wow, if you're young, old, doesn't matter. If you're new to this, I mean, sock away as much money as you can and invest it into, if your plan is to use flips as a means of generating cash and then buy rental properties with that, that's a great strategy. Just don't buy cars and things like that are gonna lose their value. I mean, if you're it's just not wise. I mean, because we all know how hard it is to find good deals and to make money in this space. So, you don't want to just throw it away on useless junk. I would be investing for the long term, whether it's investing in you know uh, your own single family rentals or multifamily or investing in other people's deals. You can passively invest in syndications, you can passively invest in hard money funds and things like that. There's a million different things you can do with your money instead of, buying cars and jewelry and stuff like that.
I couldn't agree more. I feel like a lot of the new people entering this market are kind of heading into that direction, which is not sustainable for the long run, like you
Right.
said. And then you kind of lose your direction also. So I agree with that advice. And
Yeah.
you've been in this industry for a long time, so you've seen a lot of things. Has there been a challenge that you went through that really taught you a lesson that you can share with us?
Yeah. 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 For sure. It was a property that me and a couple partners bought it in 2022. That it was right before interest rates started going up, right before the Fed. It was at the very beginning of 22. We bought this property. I think we got in touch with the person, and it was a Google ad lead, and we got in touch with the person in either late 21 or early 22. This is sort of, if anyone remembers that time, it was a zero interest rate environment. Property prices were just skyrocketing. Yeah, everybody and their brother was buying real estate at the time. And we just, I was the one that led it. So I shouldn't say we, it was me. I had this just ill-advised plan with this property. It was a higher purchase price than what we typically like to do. My partner and I, we usually like to, when I was flipping houses, I'm not doing that anymore, but when I was, we like to buy, we called them singles and doubles. We didn't want to go after the big home runs. We don't like new construction. We don't like the $1 million homes. We want to go after the singles and doubles where we're going to make, 50, 60 grand a flip and do a handful of those per year, make a great income, and then be able to reinvest that elsewhere. So, um, you know, I strayed outside of that we had stuck to that for years. And then, I strayed outside of that on this deal. I bought a much more expensive property. It was 800 something thousand. And it was a weird property with a goofy layout and it just wasn't really, I didn't have a clear exit plan with it. I was gonna do Airbnb with it, turn it into a short-term rental. but we were also flirting around with just flipping it. It just kind of was doomed from the beginning. And then the interest rate stuff happened, and interest rates went up, and the market, collapsed a bit. And long story short, we just, over the course of about a year and a half of owning it, we tried a million different ways to flip it, to make it work, to do Airbnb. We configured the house in different ways, renting out different levels. And it was just, it was just such a goofy property and situation. And ultimately we ended up getting to the point where we just dumped it and we took a $70,000 loss on it. And it stung. It was not a fun experience, especially getting, bringing two partners into it. That was, I felt bad because I was the one that led it, and I was the quarterback, if you will. And I just had I just got emotional, about it, and bought it when I shouldn't have, and paid too much. And it just was totally outside of my area of expertise. And I shouldn't have done that. So I would say, anybody listening to this, define what you're good at, and then don't do anything that falls outside of that. And if you do that over time, you'll still have ones you lose on, even when you know what you're doing. But you won't run into what I ran into, where it was just completely, I was out over my skis, and it was a property that I just had no business dealing with.
Good point. And if you had to start from scratch today, Will, in 2026, with nothing but your wisdom and, let's say, $100,000 in cash, how would you start your real estate career? If it's for funding, lending, or if it's just real estate investing?
Yeah, that's a great question. I've never been asked that. Um, I would probably go into lending. 100,000's enough to where you can, you got a little bit of scale there. And that's probably what I would do, is start lending, and I would start working with other people. That's the biggest key, is don't be a solo operator. Find a partner to offset your weaknesses. When I was flipping houses, I was a numbers guy and I knew lending, but I didn't know anything about construction. And my partner, he was the opposite. He didn't know anything about finance, but he had a construction background, and we had a great complementary, working relationship, where his skill set offset my weaknesses and vice versa. And that worked great. So I would say to someone that's got a little bit of cash, and wants to, or no cash, and wants to get started, I'd find what you're good at, define your value, figure out what you're good at, and then go to RIA meetings, go to networking events, try to find other real estate guys that you can partner with, that have the pieces of the puzzle that you don't have. Maybe they have the money that you don't have. Maybe they have the time that you don't have. If you have more money, that's probably what I would do.
Awesome. And, Will, you're great at lending. It's your industry. What's next for you and your business? And what's next for you on a personal level that you can share with us so we can know more about you?
Yeah, it's a good question. I've been, I'm about to, Lord willing, I'm about to go out and raise what's called a 506c fund, which allows me to publicly advertise it. And that's something that I haven't done in the past. Everything in the past has been smaller scale, friends and family. I've really wanted to, you know, show the proof of concept before I go out. And, I take managing other people's money very seriously. So I believe we have, the credibility and the team in place to go out and scale this a bit. So I'm looking to raise a new fund in the near future. And I'm pretty excited about that.
And on a personal level?
On a personal level, yeah, my focus, my wife and I really, a couple years ago, started growing closer and closer to the Lord. We're both Christians, and we've tried to, just be more like Jesus every day. And my focus now is my wife and my focus is to just use the resources and the talents that we've been given and blessed with to fund initiatives that are advancing the gospel and really getting the message of Jesus out there.
Love that, man. Where do you want to see yourself 10 years from now? Just to conclude this.
Man, you're putting me on the spot with all these questions. I want to be a present father. I have 2 young boys. I have a 3-year-old and a 10-month-old. And I want to see them, I want to be able to instill wisdom, the little bit of wisdom I have. I want to be able to instill into them and just be present for them and just be very active in what they're doing and really just try to point them to the Lord and have them grow closer to Jesus. So, that's my main focus is my family and what we're doing with trying to spread the gospel. Our boys, we love them and they're just a ton of fun.
Awesome. Well, that's beautiful, man. Thank you again for joining us today. If our investors want to connect with you, learn more about Harvey Capital, what's the best way to reach out to you?
Yeah, they can go to my website. It's just harvey-capital.com, or they can just shoot me an email, will@harvey-capital.com.
Awesome. Well, and for everyone that was watching this, thank you so much. Stay connected for more conversation with the nation's top investors and industry leaders right here on Investor One-on-One. Thank you, Will.
Thank you.